Hello, welcome back to Miner Network. I'm with Andrew Radonjic, the Managing Director of Venture Minerals. Andrew, good to see you.
Good to see you too.
Just kick things off, brief company overview.
The company listed on the ASX in 2006, so we've been around for 16 years. Flagship asset is a tin tungsten project called Mount Lindsay in Tasmania, which we've already done an open pit feasibility study, so we're updating that at the moment. So that's our main focus, and we started an iron ore mine nearby last year. So that's Tasmania's main focus, but we've got some very interesting exploration assets in Western Australia.
Brilliant. Okay, before we go into the project, capital structure, if you don't mind. Just give us a bit of an overview. So market cap, share structure.
Look, it's about $1.7 billion, 1.7 billion shares on issue. Yep. Market cap's around that sort of mid-40s range, 45 million Australian dollars. The major shareholder is Dale Elphinstone, who is Tasmania's highest net worth individual. He made his money by converting Caterpillar equipment from surface to underground, and then was bought out. So he's got some dealerships called William Adams. So he doesn't compete against Caterpillar anymore, but he still makes some very specific underground, like what I call charge-up trucks and scissor lifts, that sort of service type equipment. But Dale's a big supporter of the company and a big fan of Tasmania, more importantly.
Good. Okay. Well, let's jump into your flagship asset. You've got economics around this. I'm wondering if you could just to begin with, just remind us of the highlights, post-tax numbers.
We did an open pit study back in 2012, and the number, it was a $200 million build for a 1.75 million tonne per annum plant. So this project generated a magnetite concentrate, which is about 15% of revenue, a copper con, 5% revenue, and 40% each of the revenue for the tin and tungsten. Tin con, and we produce an APT, which is an intermediate tungsten product. Mm-hmm. That cost $200 million back in 2012. But the NPV was only 142 million. And what we were going to do is, because back then tin and tungsten weren't critical minerals, they were strategic minerals, but now they're critical. But the thing we were going to do back then was to try and mine out a small iron ore opportunity, a 57% hematite mine, only a couple of million tonnes nearby, when the iron ore price was really high in that sort of 2012, 2013 period of time. Yep. When we started in 2014, the iron ore price dropped, and we only just started clearing the plant sites. That's from care and maintenance. So that was going to make about half of the money back in 2013. So, quickly we realised, well, when the tin price and all the commodity prices came off in that 14, 15, 16, 17, and they started picking up, 18, 19, we said, okay, the tin price is back over 20,000. Let's have a look at the numbers again. But we can't do the same thing. We need to go and do something different. And what we did find is that we thought, well, let's go underground, smaller, higher grade version, get the capital down, look at a 500,000 tonne per annum plant. And we also had come across, very late in the previous study piece in about 2014, that we could actually separate the tin and the tungsten using electrostatic separation, which is a mineral sands technique. Tin's highly conductive, used in solder. Tungsten is nowhere near as conductive, so they separated beautifully. So applying that to the flow sheet was going to be a game changer, and that's what we're doing at the moment. Okay. Going to an underground mine and applying that new processing technique and building a flow sheet around that.
Okay, and what's the timeline to that, and what are the steps that needs to be done to realise it? We
started in September 2021, drilling, getting about 10 tonne a sample, and we did that until around about Easter time, so April, and then we sort of brought that sample back, set up a program, test program, and the results are coming towards the back end of that. So that flow sheet's starting to settle down and will be soon completed. And we'll put out an announcement to the market about what it looks like. So the idea is, that change is to get the costs down, not only on a capital basis, but also on an operating basis. So it'll be less flotation, more gravity, combined gravity con, and then separate, as we said before. So get that mass down quickly. We'll still produce a magnetite concentrate as before, but because it'll be, the volume is significantly reduced from 1.75 to 500,000 tonnes per annum, the copper probably won't be worth doing, but we'll separate the sulphides. But the density of scheelite 6 and the cassiterite 7, they're very similar. You can't separate them gravity-wise, but you can combine them together, and so you bring that mass down to a couple of percent, and then you can you can do a lot of good things in a room this size.
Yeah.
Some very small equipment to try and improve the grade of that concentrate. So, like I said, we're near the end of that, and then once that's done, we can finish the optimisation of the underground mine design. We're doing paste fill. So this is all new for the project, even though we did open pit. We did do the geotech work, we did the hydrological work, but it needs to be a little bit more specialised and specific for an underground mine. So hopefully in the next 4 to 6 weeks, we'll put that pre-feas out. And then the idea then is very much to go straight into the DFS, do pilot scale test work, put out 3 tonne of sample through this flow sheet, see what it can do, try to get those, I suppose, those plus or minus risks and all that right down to more of a definitive feasibility standard. We don't need to do any more drilling. We'll drill the ore body out, so that's great. But we need to do, get the paste fill sorted out and spend the next, 12 months or so getting that done.
Yeah.
So by early 2024, we hope to be at the position to do a final investment decision, and then we are also going through planning to go through a more accelerated permitting process, being a major project in Tasmania, and we're looking to be able to line those 2 events up so we can look at starting construction in 2024. Plant's quite small, quite simple, and therefore we expect that construction to take only 12 months, and then by 2025 we're into production. So that's the plan. Obviously first we've got to get the pre-feasibility study done, the mine is all very much around taking advantages, the natural advantages we have here in Tasmania. And one of the things are, we're already in the mining district, 140 years of mining history. We've got hydropower going through the tenement as we speak. We're either side of a hydropower station. We're going to have a 3 gigawatt wind farm is planned to build next to the project. So lots of renewable energy.
Good.
So tapping into that, battery electric driven equipment, underground and surface, we'll be able to use. So Tasmania is already net zero emissions. It's exporting power to the mainland. It wants to put another second link in there. It wants to produce twice as much power as it needs and export all that. As the battery of the nation, as Scott Morrison said a few years ago, Tasmania can deliver this renewable energy. It's a great place to be building a responsibly sourced tin, tungsten, copper, whatever it is, because of those advantages that we have in the state of Tasmania. And that's why we think we'll present something unique. It won't be necessarily a big mine, but it'll be a very unique mine in this decarbonisation world we live in.
I'm just trying to get my head around the size of this deposit, and I guess we won't know all of the details until the PFS, but I guess how many tonnes per year could we be expecting out of this in tin and tungsten? Yeah,
well, look, like I said, the underground will be about 500,000 tonnes per annum. It'll be probably around about an 8-year mine life. So looking around about that sort of 4 million tonnes. It's high-grade core. In the open pit, we took the lower-grade halo around, and we were going to take 14 million tonnes in the pit. The resource, is 45 million tonnes. So the original idea in 2012 was to try and maximise the resource.
Yeah.
But we put a fairly large open pit on top of Mount Lindsay. There's a significant waste dump, tailings dam, and then 200 hectares of clearing. So here we're going to, using paste fill, we're down to 33 hectares. So over an 80% reduction. So so we're focusing on that high grade core 4 to 5 million tonnes. When a tin price was 40,000 early in the year, it was going to be probably twice that size. But probably better off building something smaller. And if the tin price does go up, as we all hope, then it's easier to expand within and try to maximise more, convert more of that resource into reserve.
What's the state of play with the iron ore asset at the moment? Obviously, you went through this period back in 2012 and sort of onwards where iron ore sort of traded downwards, but we have just come out of a period really where iron ore has been at really high levels. Where are we with the asset? What can we expect to come out of that?
We were commissioning and building the plant when it was $230 a tonne middle of last year.
Yeah.
Our market cap was $200 million back then.
Yeah.
But there's also the Chalice side of things we can talk about later. But we built the mine, we booked a ship, it was a $170 price. It arrived, it was $130. We filled the ship up, it left, it was $96. We had to make a decision to shut that down because the freight rates are going up and the price is going down. So the price ended up being $120 for most of that voyage, so it wasn't too bad. But for us, very much, we put it on the care and maintenance. We have now a plan to get it in fast track the next the next shipment, if you like. We've got a third of a shipment sitting on the crusher pad. The plant did a gearbox 2/3 of the way through getting the shipment together, typical, and sort of. And the plant needs some improvements. No, there's no doubt about that. But we brought the dry screening, the mobile crusher screening in, and we changed the technique. It wasn't particularly successful when we trialled it 12 months earlier, but a newer technique, we sort of applied that, and we ended up getting a product just as good as a wet plant. But only a certain type of ore can be used for that, and we've identified 5 shipments which we can get stuck into virtually tomorrow, bring the mobile crusher screening plant down and start mining. So if the price goes up, we're very nimble about picking it up, and we put out a few ships and make some money. We can pour that into the Mount Lindsay feasibility studies.
I was going to say, it would be nice if you could get some cash flow out of that to reinvest. But what iron ore price at the moment do you need for that operation to be profitable? Again,
not an easy question to answer. Yeah. Everyone asks me this question, and look, the variables in the price are, there's a headline 62 price. There's a discount because we produce 57% product. Yeah. That varies. Exchange rate, shipping rate. Yeah. Yes, we can do a bit of hedging because we delivered the first shipment, within specs as required. So the buyer wanted to see more, which is a good response. But those 4 things quite vary, and I can the price now is 100. So iron ore price goes up, so does the exchange rate. Yeah. So, we need that sort of $20 margin. We're probably around about that sort of break-even scenario at the moment. Shipping prices come down from $60 a tonne for our Ultramax, which is a 46,000 tonne shipment, down to, into the high 20s. So it's halved. Yeah. And the discount rates dropped, but as I got an email this morning, it's creeping back up again. So, that's the sort of balance. Some of those things you hedge, some you can't. So, but if everything else was the same, if you gave us a $20 uplift without anything else changing, we'd take that. Yep. And we'd start it, and then we'd hedge to that, and then we can get up and running and generate some cash flow. But at the end of the day, we make $20 a tonne, 1.6 million tonnes is $32 million, which would be great for the company.
Brilliant. And what's the life of mine on this one? How quick could you? What's the processing capacity really of this?
Yeah, well, we could. The idea was to, again, we never got to quite prove that, but we're going to do one shipment. But the idea was to do around about 900,000 tonnes per annum. There's 1.6 million tonnes of reserves at this stage, unless if the wet plant performs better, then maybe there's a bit more we can upgrade. Yep. So 2 years mine life normally, provided the price stays, in the positive range, then it'd be just a quick 2 year mine life.
Okay, and is the strategy at the moment wait for the iron ore price to increase, make a larger profit margin on it rather than extract it now for less?
We want to get at least that sort of $20 a tonne margin. If we can achieve that and more, obviously be great. Okay. But if we can achieve that as a minimum, and that way we can make enough money back, to pay for the capital investment, and like I said, to put it back into Mount Lindsay, so we'd have to do another capital raising, for funding studies going forward. So. That's the plan. It's care and maintenance costs. We're trimming them all down. So we wait and see, and maybe once COVID lockdown stops in China, we might see a spike that quite often happens, and yep. We're ready for it should that happen.
Well, they're under a lot of pressure to stop the lockdown, so that could happen any day now. Looking into Western Australia, obviously one of the most exciting bits of news that you have had is the JV with Chalice. Maybe you could just touch on that, remind people what that is.
Yeah, well, part of our, as I touched on, the $200 million market cap Venture Minerals had was around the activity of Chalice. As we were talking before we started getting online here, but the guys came knocking on our door 3 months after the discovery at Julimar. So virtually they were in West Perth. Grabbed a business card, said, we're just going to drill rig, which is 45 minutes away. It's sort of like, and 3 months later we did a joint venture. We thought, here are the guys, they know what to do, how to find these things. So why not let them listen our project and see what they can do? You look at a mag features, it's a dead ringer, it's a lookalike. They called it a Julimar lookalike, not me. And they've spent so far the $1.2 million to get to the first 51%. I've drilled some holes, I've done some ground EM. We did airborne EM, had some airborne EM anomalies. And I did an extensive auger geochem program. We did more of a laterite, more specific program. And they've come up with, what's interesting is that the 3 holes I drilled confirmed the VMS style targets which we found. But they weren't able to get any more of that sort of 2.5 metres, that massive sulphide with a nickel, copper, and cobalt. And clearly there's something nearby which is attracting their attention and our attention. And what we found is that just towards the north, there's all these infrastructure and power lines that affect the EM we flew. Just before that, there's some airborne EM anomalies there, and their soils, they got 2 nickel-magmatic anomalies there, directly above our anomalies, just before the impact. And what we also found is we pegged a block of land. When they made a discovery, we decided to peg more land around our project because we knew there was this ultramagnet which was converted into talc, which you won't see as a mag feature because it's destroyed the magnetism of it, if you like, converted it. And that lines up beautifully with one of these anomalies. So we're pretty excited. So they're going to get on the ground shortly, get those targets ready for drilling and expand the area they're looking. So they would potentially probably went for the lower hanging fruit on the areas we were doing, but in much more greater detail. But they've yielded some new targets just by branching out a little bit. So hopefully by Easter time, before the Australian winter comes in, they'll be out there drilling 2 new targets, and maybe investors can be excited about another potential Julimar getting discovered on our Southwest project.
Good, okay. So you mentioned that they've already spent 1.2, was it?
Yes.
At the moment? And they had already done some drilling. What sort of results did they come back with there?
The results weren't much different. It was really very much about the soil geochem anomalies, to be honest with you. And the next phase is $2.5 million over the next 2 years. So they've got to spend that by July 2024. So.
And where does that get them up to? Is that 70%?
Correct, 70%. And then Venture has the option to hold 30%.
Okay.
So our idea was to get them to spend $3.7 million on the ground.
Yep.
And by that stage, we hope to have an idea of what's around, and then venture shareholders want us to participate and hold 30% stake in. Let's hope it's another Julimar. Then a no-brainer, easy decision to do.
Yeah. Okay. With the agreement, when you do hold the 30%, do you then need to continue contributing to the
Correct.
exploration the same amount of 30% of whatever?
Absolutely. Yeah. The program, obviously, they have the majority ownership. They'll be running it, but we'll be, if you like, passively funding it, contributing.
But again, if they find a Julimar replica, that should be a fairly easy thing to find funding for. Talk us through the next 12 months. What should we really be looking out for? What should we be excited about?
Well, for the next 12 months, obviously, we touched on the work at Mount Lindsay. Yep. There's a pre-feasibility to be out at this, probably early within that time period, and heading towards the DFS. We like to keep investors entertained. Feasibility is a boring time, but we have many projects which we kind of diversified a bit to survive, and the benefit is obviously Chalice is one of those benefits, Chalice JV ground. But we have a second rig just starting at Mount Lindsay. We're long strike to the Renison Belt project. We haven't drilled their host rock within our tenure, and it lines up straight to a historical alluvial tin area, and we're drilling along there. The great news is that we found some rare earths in some of the drilling, in a deeper drilling, and we found that when we looked at our data set with the high phosphorus zones, that we found clays at our reward tin prospect which had rare earths sitting adjacent to the tin zones, clay hosted, all brand new. It's open in all directions. We've got more assay, more sampling. We might have a rare earth target there, and we just started drilling another rare earth target in a different rock unit running parallel. So we might have got onto something here which is quite exciting. So that's one thing for shareholders would need to think, that we know there's rare earth opportunities. We found one at Golden Grove North, 12.5% total rare earth in a rock chip sample. So that's a different style. So we've got 3 on the go at the moment within our own portfolios, which is a great benefit for the shareholders. Obviously Chalice, hopefully drilling that Q1/Q2 next year. So there's discovery potential, and there's a couple more targets, nickel targets, sitting in the Mount Lindsay area. Great geology, but we've only ever focused on the drilling underneath the old historical tin mine at Mount Lindsay, and Reward. So I think we won't be resting our laurels. You won't get bored waiting for those feasibility results. We'll continue to drill rigs spinning and hopefully get a new discovery in the process and keep adding to the value of the company.
Good. Andrew, thank you for your time.
No, pleasure.